Coming into 2018, guys, what are the measures currently used in Sri Lanka to indicate the change in general price level? Two of this we learned in the 2017 paper at the very beginning. One, the Colombo Consumer Price Index, that is one. The National Consumer Price Index, that is another one. What else? The GDP deflator. Okay. GDP deflator. What else? What does PPI stand for? PPI? Now you all know CCPI, Colombo Consumer, that is the National Consumer. This is the Producer Price Index level. Producer Price Index. We don't learn this in detail in our syllabus, but no, there is something like this as well. You can Google and see it's there. Okay, right. So those are the measures used to, those are what we use to measure the changes in general price level. Very simple. They are just asking you to state that. Then part 2. What are the adverse effects of inflation? Now see, last paper was hard. This paper they are asking nonsense. No, GDP deflator also shows the changes in price level, right? Nominal GDP divided by real GDP is the GDP deflator. What are the adverse effects of inflation, guys? They are asking for the disadvantages of inflation. Can you give me some disadvantages? You can talk about fixed income earners. What happens to these people? Fixed income earners. Fixed income earners, what happens? Fixed income earners lose, you can say lose out. Why do they lose out, guys? Because they are getting a fixed income, prices are going up. So what happens to these people? Their real income starts to come down. They have been earning 50,000 before, now also they are earning 50,000. But since prices have gone up, now their purchasing power is very less. This can be one. What else? You can talk about how this leads to poverty, right? So you can say can lead to poverty. How? Because when the prices of goods keep on going up, now you all saw in the recent 1-2 years, how many people fell into poverty? National poverty line. How much is the national poverty line? I sent this in the past paper class group very recently. National poverty line for, I think, June or July. What's the number? At least the close number? How much? Don't you all ever read something that comes? How much is the national poverty line? Close to around 14,000? 13,777? That is end of December 2022, right? I gave you the more updated one in the past paper class group, I think last week or something. December 2022, it was 13,777 if I'm not mistaken. Now, if I'm not mistaken, it's at around 14,000 something. Okay. So that what is the national poverty line? Go and learn unit number 11 and 12. Okay. So what happens? The more and more increase in inflation, the more and more inflation you have, more and more people will fall below this poverty line. The poverty line would start going up when there is inflation. So more and more people will fall down. So you can say can leads to poverty. What else? What are the other disadvantages? Now, you can say harmful for what? Harmful for the BOP current account. Why? Because when there is inflation, your export prices go up. Your export prices are going up means your exports are not competitive, no, are uncompetitive. Now you can't compete with exports of Bangladesh and all because your exports are very expensive. And also what might happen is people might import more because your country's prices are high. So all of this leads to what? Your current account leading to a deficit. Okay, that can be one. What else? Now you can say lenders, people who lend and also people who save money, right? Savers lose, right? So there is, you can say there is no incentive to save money, guys. When there is high levels of inflation, your real interest rate is negative, no? Nominal interest rate minus inflation. So whoever who is lending, whoever is saving money are losing. So if there is no savings in the economy, guys, think no savings means no investment. No investment means no capital formation. No capital formation means it affects economic growth. So there can be long-term impacts on that as well. Okay. Negative effect on exports is this number 3 itself. So you can write this. Yes, you can talk about shoe leather and menu costs. Fine. Shoe leather and menu costs. All of these can be adverse effects of inflation. Public borrowing increasing? No, right? Maybe public borrowing increasing can go and help with can lead to inflation, but because of inflation, public borrowing not a direct impact. Don't write that. What is income distribution? Income distribution is how the income has been distributed, guys. Like, have we had equal income distribution? Has the income distribution been unfair? So income distribution is how the total output of the country is being distributed between the parties. Or in other words, is there a gap between the rich and the poor? Okay, that's 2. Then we'll go to 3. Again, there is a credit creation question. We'll see if you all can get this right. The following is a simplified balance sheet for one of the banks in a commercial banking system. Deposits are given, equity is given, required reserves, excess reserve, they have given it separately. Okay. Now remember, this is the total reserves that they have. Securities and loans. What is the required reserve ratio? Very easy, no? Deposits are 100,000. From that 100,000, they have kept 10,000 as required reserve. So how much is the SRR? How much is the ratio? How much are they keeping? Come on, give me an answer. What is the required reserve ratio? Common sense, you should be able to figure out this is 10%. But otherwise, what can you do, guys? Right? So you can say required reserves over, now it's 2 marks, no? So the method also. Required reserves over deposits into 100. Required reserves are 10,000. Deposits we have 100,000 multiplied by 100, we get SRR 10. Is almost like 3 marks. Then the next one. Assume that a customer withdraws 2 million from his current account at this bank. How much will this bank's reserve change based on this cash withdrawal? So what happens, Lamai? If a customer withdraws how much? 2,000. If they withdraw 2,000, deposits will go down by 2,000, correct? Your total reserves here, which is 15,000, will go down by 2,000. Now you'll have total reserves 13,000. But can you break this down and tell me how much is required and how much is excess? Now you have deposits of how much? So now your new level of deposits will be a 98,000. So now how much should you keep as your new deposits are 98. The new amount of reserves that you have is 15,000 minus a 2,000. You have new reserves of 13,000. Reserves went down by 2,000. Deposits went down by 2,000. Same like the 2017 question. Okay. So now tell me, from this 98,000, how much should they keep as required reserves, Lamai? SRR is a 10%. How much should they keep? 9,800. Okay. But they actually have in total 13,000. So how much is the excess reserve? 13,000 minus the 9,800. 3,200 is their excess reserve. So what will be the new numbers? The new numbers will be deposits are 98,000. 98,000. Required reserves new number will be 9,800, 10% of that. Excess reserve new number will be 3,200. So can you see 2,000 went down? From this side, 2,000 went down. From required reserves, 10%, 200 went off. From excess reserves, 1,800 went off. Balances. Yeah, that is what is happening. Is that okay, guys? Not hard, huh? Something that you all should be able to figure out. Safe. Then part C. Assuming the required reserve ratio remains unchanged, what is the maximum amount of new loans this bank could make? We did that. We did in the previous question. What is the maximum amount of new loans they could make after this withdrawal? That is the excess reserves that they have. So how much of excess reserve do they have now? They have excess reserves of 3,200. That is the amount of new loans the bank could make. Now, don't just say ER32. Say that the bank has excess reserves of 3,200 now. Okay. As a result, they can make new loans of that amount. Fine. Is that fine, guys? How that's easy, no? Trade creation not that hard. We'll do a small seminar also covering all the important questions, but I feel it's okay, guys. I feel it's not something that you all should be very worried about and scared. Okay. Now, part 4. Hiyo, what is meant by monetary policy? What is meant by monetary policy, Rama? So come up with the answer, right? If you at least don't have a theory note, go to the central bank website. Here, they will have what is meant by monetary policy. Okay, here, what is meant by monetary policy? Okay, monetary policy is the process by which the central bank influences the cost and the availability of money, that is the interest rates and the money supply, with a view of attending price stability. That is what is meant by monetary policy. And then go a little bit more and explain. So say in Sri Lanka, the central bank is the one who is responsible of conducting this monetary policy. You can talk a little bit about the monetary policy framework if you want, right? It's a how many mark question? It's only a 3-mark question. Don't have to talk much. Yes, influence means control. Okay, so talk about controlling the money supply and interest rates, that the central bank is the one responsible of conducting this monetary policy. See if there's anything else in the marking scheme, guys. For 3 marks, you don't have to talk a lot. They've given like a definition for 2 marks and given 1 or 2 lines more, should be more than enough. Only a 3-mark question. Anything else? As the marking scheme in your past paper book talked about something. If you want, you write a little bit more. So you say talk a little bit about the monetary policy instruments. Say there are qualitative, quantitative, right? Talk about object of price stability. So you can say monetary policy is to make sure there is price stability. Talk a little bit about the framework is to keep flexible inflation targeting, means keeping inflation at a mid-single digit. No, more than enough, right? Now remember, guys, for a 3-mark question, you don't have to write pages and pages, okay? So as long as you're given the main thing, it's more than enough. Okay, done. Then part 5. So far the questions have been easy, no? All these questions, nothing hard. Distinguish between quantitative and qualitative credit control methods. Quantitative and qualitative credit control methods. What is the difference? Remember, quantitative is what? Quantitative is SRR, policy rates, bank rate, open market, the quantitative. What are qualitative? Qualitative is moral suasion, credit limits, margin requirements on imports. Then you have change in the collateral requirements. All of those are qualitative. So they're asking you to distinguish between qualitative and quantitative. So what can you write? We'll see if the central bank has. They might have. The website might have. Here. Go to monetary policy. Go to monetary policy instruments. There is here instruments and implementation. Yep. So all of this is there, right? How the policy interest rates work, how the SRR works, how the other policy instruments work, right? Like the bank rate and all. Okay. Then here, going to, let's say, things like there is, can't find it, but even do a normal search, right? Qualitative, monetary policy tools, right? Go, if there is one from the central bank, go there. Mm, policy instruments. This is more like a whole this thing. No, don't go there. You all will get scared. Okay. So do you guys, what I'm trying to tell you guys is most of the stuff are there in the central bank website itself. You can search around, play around a little and write. Okay. Even if you don't have a note, very reliable stuff are there in this. Okay. So what can we say, guys? Quantitative these things, how can you distinguish between the two? Give me some points now. We have been learning these. Now you all know what these are now. Give me some points now. Difference between quantitative and qualitative monetary policy instrument. What can we say? Quickly. 2018. Okay, controls the volume and the cost of credit. Which one? Okay, quantitative mainly controls the cost of credit. So in other words, mainly controls the interest rates, SRR, all of that. Okay, fine. Okay, so usually guys, if you take quantitative, does it affect only one industry or does it affect the whole of Sri Lanka as a whole? Quantitative, if they change SRR or open market operations, those things are, it affects you can say, affects the entire economy. Okay, and therefore you can say what, guys? These are non-discriminatory. What does that mean? Now, in a qualitative one, Lamai, you can discriminate. What is discrimination? Not this gender-based discrimination. The central bank can say, look here, don't give loans for the agricultural sector. That is discrimination, right? Don't give loans to, let's say, the importers. Those fellows are importing more, don't give loans for them. That kind of a thing. That's what you call discriminate. So it affects only one person, other person is not affected. But with a quantitative, like standing deposit, standing lending facility rates, these open market operations, it affects the entire economy. In other words, you can say they are non-discriminatory. What else can we say? Think and tell. What else can we talk about? Non-discriminatory, fine. Yes, write a little bit about the instruments also, right? So give what are the instruments that we have here? So we have instruments like Monad, the policy rates, that is the standing deposit, standing lending facility, and the bank rate. You have the SRR, you have open market operations, all of that comes under this. Then what can you write about qualitative, Lamai? Qualitative credit controls. What can you say about this? Okay, affects a selective section of the economy, fine. But before that, can you give me like a broader thing? Now, so it affects what? The flow and direction of credit, Lamai. Especially the direction of credit. Where is the money actually going? Which direction? Is it going towards the agriculture sector? Is it going towards the small businesses? Is it going towards the export sector? It controls the flow and the direction. They change these collateral requirements, moral suasion, this, that. So mainly what? The flow and the direction of credit is what is controlled. So, and this you can say affects only a selective section in the economy. So you can say these are discriminate, right? They are what? Discriminate. So that means only one party sometimes is affected, others are not affected. Okay, and then you can give in examples, guys. So examples like what? Credit ceilings, moral suasion, and I'll just write short forms, guys. Moral suasion. What else? Changing the collateral requirement. All of that is fine. So you will get 1 mark for the explanation, 1 mark for giving the instruments, 1 mark for the explanation, 1 mark for the instruments. So nicely give it in a nice paragraph. If you can do that, you will get your full mark. Is that okay? 2018. Redistribution of wealth. Yes, you can say the rich person gets richer and richer during inflation, and the poor person gets poorer and poorer. Okay, fine. Right. That is 2018. We'll wrap it with there for today. We'll not hurry and do 2019. You can, yes, can you all make sure that you do this? I'll let you all know when we will have the class. Probably within the end of, by Sunday, we'll try to have it. Make sure that you all do the questions and come, because I can't guarantee when I will upload this on YouTube. My even yesterday I slept early at around 2-3 o'clock in the morning. I'm finalizing your the mock exam papers and all. So I don't really have the time with work and all of that. So can't promise when I'll put on YouTube. Try your level best, do the question, and come to class. Okay, so with that, we'll wrap it up. I'll see you all very soon. I'll let you all know when.